Holy smokes, everyone. We need to talk about right now what Janet Yellen just said, some of her warnings for us, and what us as investors need to pay attention about with what she's warning about, what average Americans need to know. You need to understand what is behind the surging fuel costs. Of course, a lot of my viewers will know what's behind it. But if you have family or friends that are wondering what is behind the recent surge in fuel costs, what's really happening, please share this video with them. So first things first, something has just came out. Janet Yellen has just done an interview on CNBC. And, you know, recently Janet Yellen, she's been talking a lot about, you know, what's going on the economy and what's going on with inflation. And unfortunately for Janet Yellen, you know, her start as Treasury Secretary, it's not going too well. When she first came in, you know, she was asked about, will this money printing, you know, lead to high inflation? And of course, her as an ex-Federal Reserve chairperson, she said, no, it's not going to lead to high inflation. But then we saw it did. Then when inflation got worse, they asked her, okay, you know, is the inflation going to stick around? She said, no, it's transitory, it's going to go down. This was just a couple of months ago. Well. They just come out with a recent interview with CNBC. And now, what they're seeing with the surging fuel costs, they've asked her about the inflation that's going on right now, and if it's still transitory. And what she said, even for me, was something quite worrying. You know, she normally doesn't try to fearmonger, or they try to always turn something into a positive. She said that Americans are going to experience very uncomfortable inflation, not for another month or two, but for the next year. That is right, everyone. They're going to experience, or you are going to experience, extremely uncomfortable inflation for the next year. And who knows, will it be longer than a year? They've been saying for the past year now that it's going to be over in a year. So what's really behind this, and what does this mean for you and me in simple terms? What this means is the only way they're going to be able to get inflation under control, and this is what she was asked in an interview with CNBC, is, well, is the US going to have to go into recession, or is the Federal Reserve going to have to lift interest rates up so high that it's going to trigger a recession? Because, you know, most Federal Reserve rate hike cycles, unless they reverse course, it always leads to a recession. And of course, she tried to say that, you know, don't worry, you know, it'll go down after a year. These 2%, these lifting interest rates at 2%, that'll be enough. But she didn't sound too confident. And again, they're always going to try to spin things to the positive. So you got to kind of read between the lines. And so what I take from this, and what you need to take from this, is there's no way they're going to be able to avoid a recession to bring this inflation down. And what we're in right now is what's called stagflation. That is like what happened in the 70s, where there is high inflation and low economic growth, or negative GDP, and where the economy can be in a recession but still have high inflation. And that's a reality we're in right now. Also, what's happening with wages. You know, the scam they try to tell people, you know what, inflation's good, 2 to 3% inflation's good because you'll get a pay rise. Well, hello, people. Has your wages been keeping up with inflation? CPI is 7.9%, but the annual increase in wages is only 5.1%. And again, these are just averages. So no, inflation's, wage increases aren't keeping up with inflation. That's why we've seen the middle class get absolutely destroyed the past 30, 40 years. And another side note, what is absolutely crazy, just a thought that came to my mind today, and something I've been thinking about for a while, is how did we get to this point? Well, Janet Yellen, she's a US Secretary Treasury now. She's an ex-banker. She worked for the Federal Reserve. Right before she got the job, she was having speaking engagements, getting paid millions of dollars to speak to these banks. So of course she's going to lobby for the banks and do what's best interest for the banks. Also, the SEC chair, Gary Gensler, he's an ex-Goldman Sachs employee. Most people in the government that are working on these financial committees, or most US treasuries, they're people coming from the banking sector. So why do you think they tell us that the banks are too big to fail and that we need to always bail out the banks? Well, because this is bankers telling this. Newsflash, of course they're going to tell us it's too big to fail. And they've made it that way through lobbying, through legislation, regulation. Now, you can't get a job without a bank account. Wasn't long ago before where people used to get paid with envelopes, cash. Your retirement is now all wrapped up in Wall Street. So they made it so that all your retirement will go into the markets. So when the markets do crash, everyone would praise the Federal Reserve and the banks for bailing it out. But really what they're doing is bailing out Wall Street. And this is just making the cost of living more and more burdensome. And these people, they're not really going to be able to afford to retire with this inflation rate. They're going to have to keep on working. So again, takeaways from this, people, like I'm saying, the Federal Reserve is going to have to get much more aggressive. Elon Musk has been warning about this. Kathy Wood is now, is normally bullish. The bull queen is now warning about this. Inflation's going to get worse. And we're going to be heading into a recession. There's nothing I think they can do to avoid everyone, so it is time to prepare now. But even though this sounds all doom and gloom, you think I just post all doom and gloom, for those who are prepared, you have nothing to fear. This will create great buying opportunities. When these markets, finally do enter a bear market of 20-30%, this will be a great buying opportunity. It could be one of the buying opportunities of the decade, and who knows, the declines could even get bigger depending on the developments, and I'll definitely keep you updated with the changing macroeconomic environment, because things, as we can see, can change very, very quickly, like what we're seeing over the past couple of months. So it's time to prepare now. Like I said, I've been stack buying cash. I've been dollar cost averaging to gold, even though gold just passed 2,000 an ounce. It's a bit expensive now. Maybe wait for another dip. But those that dollar cost average in around 1750, where I was telling people to get in, they've definitely made some good returns. And look, even if your gold just holds its value, and the stock market declines 20%, well, then you're still 20% better off. So that is a warning from US Treasury Secretary Janet Yellen about inflation, people. So now you even have people in the government that are saying it is going to get worse. Me, what I'm doing, I just did a huge grocery haul to top up my food storage, and I went to Costco. Just 2 grocery carts cost me $1,200. I was absolutely shocked. I thought maybe $800 max. $1,200, people, for 2 shopping carts to stock up my food storage. So everyone, this was just a quick update. What do you think about this inflation crisis going on now? Do you think the Federal Reserve will stop 2% interest rates? Let me know. Thanks for watching. I'll see you in the next video.